You may be familiar with two types of investment strategies. The first one employs a range of people who look at the universe of stocks and see which stocks would outperform other stocks. This is known as active management. These funds are more expensive because they employ a lot more people who try to beat the index. In contrast are index strategies. They generally are lower in fees, and that is because they aim to replicate an index such as the ASX 200. So active management attempts to outperform the index, and index strategies merely replicate the index. However, there is a third way that combines the best aspects of these two well-known approaches.
These funds follow a formula which is set out in an index, but the index tracks something that's a little bit more interesting than the ASX 200. The index, for example, might restrict the fund to only choosing companies that pay a dividend, or it might just choose the companies that rate highly on a quality score or a sustainability score.
One of the most interesting smart beta approaches is to change the weighting scheme. If you look at the ASX 200, the big four banks comprise over 30% of the index. What that means is you have a lot of money invested in financials. If you look at the top 20 stocks of the ASX 200, that comprises over 60% of the ASX 200. If you look at the remaining 180 companies, their impact to the total investment return is negligible.
The smart beta approach to weighting is to take the most liquid stocks and then invest equally in each of them. We call this equal weighting.
An index that gives you equal weight exposure gives you less exposure to the big companies and more meaningful exposure to the next level down. So you get meaningful exposure to companies such as A2 Milk and Treasury Wine Estates. On our website, you can find a research paper that outlines a mathematical explanation as to why you want exposure to the not-so-big companies.
We use this equal weight strategy in an ETF called the VanEck Vectors Australian Equal Weight ETF. You can buy it on the ASX under the trading code MVW.
Smart beta uses the power of the low-cost index method. However, it does something cleverer. You don't have to call it smart beta, you can just call it smart investing.